The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Putting a roof over your head without the headache. Get answers to all of your home buying questions. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And our Sunday best to you, where Mr. Federer has defeated Mr. Silic at Wimbledon. Good morning and welcome to the Accunet Mortgage and Realty Show. I'm Steve Ketelar, along with Accunet Mortgage and Accunet Realty Advisors owner Brian Wickert and licensed Millennial loan consultant and aspiring thespian David Wickert. We'll get to that here in a second. If you've got a question, you can text it or call it in on the Accunet Mortgage talk and text line. That number is 414-799-1620. Good morning, gentlemen.
Good morning. Yes, I was able to fit today's show into my schedule. Would you like me to do the whole show in today's received pronunciation? No, I enjoyed doing a production of Mary Poppins at Divine Savior Holy Angels this weekend. Tickets are still available for today's show at 1 p.m. and 6 p.m. if anyone wants to bring a child or grandkid. It's a good family show. So I was able to squeeze in the radio show this morning. Can I tell you my favorite word from our dialect coach was
yes.
Controversy.
Controversy.
Not a controversy, a controversy.
Oh.
So the Brits just say it better, at least in my opinion. So,
do you drink beer from an aluminium can?
An aluminium can, yes, absolutely. And I was typecast as a banker. I'm George Banks, the banker.
Yes.
So I get to say words like collateral on a musical stage. So that's
yes.
unique, at least. So, but anyway. On to the world of mortgages. Good morning, Dad. And,
good morning, David. You did a nice job. I was proud of you. I've seen the two productions so far, and it was better, even getting better all the time. It's really quite a project. Hey, so I wanted to start out, Steve, talking about the white hot segment of the market, and that is an example that I got from Paul Langlois, one of the top 10 Shore West agents. And she had a buyer that, check this out, wrote an all-cash offer. An all-cash offer, I think the price range was right around $450,000. This was for a single-family ranch with an exposed basement in Brookfield. So let's review the contingencies in the offer that they didn't have. Okay, did they have a sale of home contingency? No. Did they have a financing contingency? No, because it was a cash offer, and they even proved up that they had the cash. Number 3, did they have an appraisal contingency? No. And by the way, did they write the offer sight unseen because offers were piling in the morning, and they had to get an offer written by 5 o'clock because that's when the listing agent was cutting off offers.
Wow.
So what contingency did they write with, do you think, that prevented them from getting the accepted offer, David?
The inspection contingency.
That is correct. The inspection contingency. Somebody else beat these people, Steve, because they wrote cash. Oh, did I mention the buyer that I'm talking about? $15,000 over asking. Okay. Cash offer.
Okay.
Wow.
No appraisal. But somebody beat them because they chose to totally go naked, meaning no contingencies whatsoever. Just like, we will buy your home, here's our suitcase full of money, and we're not doing anything else. And they were from out of town. So if anybody out there has an exposed ranch that they would like to sell, give me a call, because I got a hot buyer for you, or if you want to list it, you're going to get a lot of offers. And what kind of a buyer do you think is interested in this type of a home? Steve, do you have a guess, given what I just told you, that I had multiple cash offers?
Oh, this has got to be at $450, you said, in price range?
Yep.
Oh, boy. I would think a corporate CEO type, somewhere along those lines.
Okay, or in this case, it was the empty nester who's selling their house, more expensive house. And these are people who are in their 50s, maybe even 60, right? So they have assets accumulated. They are now downsizing, and what do they want in their old age? A ranch, right? They want the bedroom and the bathroom and all the functionality, but the finished exposed basement is really cool too, because that gives you that extra living space when the kids want to come over, and bring their kids. All right. So that's how hot it can be. Brookfield exposed ranch, super duper hot. I'm sure that's popular in other areas as well. When we come back from this first break, we are going to talk about the plethora of, could you say that in British?
I think it's just the same. Plethora.
Okay. Of first-time homebuyer programs that we have available at Accunet Mortgage. We'll take care of that when we come back.
Right here on the Accunet Mortgage and Realty Show. If you have a question, you can call it or text it in on the Accunet Mortgage talk and text line at 414-799-1620.
Getting you into the home of your dreams. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, the Brewers and Phillies round out their 3-game series today at Miller Park. Bob and Jeff are in the booth and kick off our coverage at 12:35 this afternoon, sponsored by XPO Logistics. You're listening to the Accunet Mortgage and Realty Show with Brian Wickert and David Wickert.
Absolutely. Mr. British over there. Hey, so there always are articles, continuing article after article after article saying, boy, credit's too tight. And we talked about that a couple of weeks ago, but we didn't get around to first-time buyers in particular. And I got to tell everybody, we have a terrific new web page at Accunet.com under the Buy a Home section. And you click on that menu, and then you'll see first-time buyers. And then there's a menu for Wisconsin first-time home buyer programs. And so we just thought we'd take the opportunity, because the biggest myth out there that people carry around in their head is, oh, I have to have a fill-in-the-blank, 10% down payment, 20% down payment, 5% down payment. And the good news is that for Wisconsin home buyers, David, what's the lowest down payment?
The lovely number of 0.
0? All right, so we're going to start out with that one. We've got 5 or 6 maybe options for you real quick that we're going to compare. So let's start with door number 1. The best program ever for first-time buyers in Wisconsin is
the first-time home buyer program through WIDA. If you are, I'm going to use Waukesha County as an example. If you have household income of less than $72,400, WIDA will allow you to purchase a home with 0% down with no monthly PMI at a rate of 4.375.
Wow.
Today. The APR is 4.43.
Okay. And so what kind of a payment would that be, David, on a $200,000 home purchase? And, by the way, we're going to throw in their Easy Close Second, and WIDA stands for Wisconsin Housing and Economic Development Authority. And this is just a plain old-fashioned 30-year fixed-rate loan, Dave.
Yes, that's a payment of about $1,414.
All right, so
all in.
That includes a first mortgage for 97% of the purchase price, a second mortgage for 3% of the purchase price. Do you have right on there how much other cash would they need for putting property taxes, and what did you use for property taxes?
I used about $4,000 a year in property taxes. You'd have to come to the closing table with about $3,000.
$3,000 American dollars is all it would take. And guess who can pay for that?
The seller.
The seller. So there's our best program.
And even just one remove from that, even if you're not a first-time home buyer, or if you make a little bit too much income, WIDA offers just a conventional loan. You can make up, if you're just 2 people, $83,260. The only offset is it's a 0.5% higher in rate, but hey, you're making $11,000 more dollars a year.
All right, what does that do to the payment?
The payment goes up by about $60.
$60. So if you qualify for their super cool first-time buyer program, 0 down and a payment of
totals $1,473.
This is if you don't qualify for that income first. Mm-hmm. So it's related. WIDA has 2 different programs that we have available. One, if you're a bona fide first-time buyer, right, and you make this certain income limit. What if you have a baby? What if it's a 3-person household?
Yeah, if you're have a baby and you're a first-time home buyer, you can make that $83,000.
Okay.
If you're not a first-time home buyer and you have 3 people in your house, you can make north of $97,000 a year.
All right.
And still qualify for WIDA.
So I would say the only hitch in the WIDA giddy-up is no condos. Got to be single family or a duplex. All right, let's move on. What's our third best first-time homebuyer program?
All right, the third best is Home Ready, which is a program from Fannie Mae that allows folks to put 3% down so long as they meet the income limits of their specific census tract.
Ooh, down to the census tract level. So the WIDA is income limits based on the county that you live in. The Fannie Mae Home Ready program is income limit based on the census tract, which is even a subset of a zip code.
Correct. So in Waukesha County, for most of Waukesha County, the maximum is $72,400. There are patches in downtown Waukesha where there is no limit.
Okay.
And that's also true in some patches of Milwaukee County as well.
All right.
And so for monthly PMI, we could offer 3.875% with an APR of 4.51. That's a monthly payment of about $1,446 per month.
Okay, so the difference here is you got to come up with a 3% down. But wait, could that come from a gift from a family member?
You bet.
And could the seller cost be paid by a seller?
Yes.
I mean, other closing costs?
Yes.
Oh, okay. So 3% down on this, right? So there's our top three. WIDA first-time home buyer program, WIDA anybody, just the income limit, and then Home Ready with an income limit. When we come back, we'll give you our next three best first-time low-down payment programs after this break.
And if you have a question, you can text it or call it in on the Accunet Mortgage Talk and Text line at 414-799-1620.
Home buying advice from the guys who know it best. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, Foxconn executives could decide in the next 2 weeks whether Wisconsin will land up to 10,000 jobs, and one of the people likely to be at the negotiating table is Racine's new mayor. He joins John McCure at 5:20 tomorrow during Wisconsin's afternoon news. Brian Wickert and David Wickert with us here on the Accunet Mortgage and Realty Show.
So I just want to emphasize, so we just gave our top three first-time home buyer low down payment options. And I just want to emphasize that this is why it's important to talk to a licensed, well-trained loan consultant at Accunet, because we're literally walking through 6 different ways we can cook this chicken, depending on where you fit, depending on down payment and income and all that jazz.
That's right.
This is the progression a loan consultant goes through in their mind when they're having that conversation with you on, like, how many dollars do you have that you want to make to a down payment? What is your income? Let's try to fit within the box.
Correct.
For any of these programs.
And I want to point out one other thing. So the WIDA first-time program is restricted to first-time home buyers. Then when you move up to the anybody at WIDA, you can still do 0% down even if you're a repeat buyer.
Correct.
You just can't own any other real estate at the time of closing.
And
the Home Ready is not restricted to first-time home buyers either, but works really well for it. And on the Fannie Mae Home Ready, and these are all 30-year fixed-rate loans we're talking about, the Home Ready works with a condo. All right.
Yeah.
What's our number 4, Dave?
Can I also just say you regain your first-time home buyer status if you have not owned a home in the last 3 years?
Correct. So let's say you owned a home with your spouse, you got divorced, you've been renting for 3 years. Shazam!
You are a first-time home buyer again.
There you go.
So the fourth best, and I actually think this might be the third best option, is Home Ready no monthly PMI.
Oh, okay.
So you can put 3% down. And as I describe it to folks, hey, if you want to avoid the dirty monthly PMI, we can do that. It's just an offset in rate.
Okay.
So I've got someone lined up with 700 credit, and at the close of business on Friday, we could have done 4.75%.
Sounds high, Dave.
With a APR of 4.78. But the payment, because you're avoiding the $150 in monthly PMI, the payment is $1,395 a month.
Whoa. Okay, so we got 3% down for this mythical $200,000 sample home we're looking at. You got $200,000, and on the Home Ready with no PMI, the total payment is
$1,395.
Okay,
$50 less per month.
And the Home Ready with monthly PMI was
$1,446.
Ooh, okay. And then the WIDA, not a first-time home buyer, was
$1,473, so $33.
But that's with zero down. So we just
Correct.
went from 3% to 0 when we shifted over to the WIDA.
Yep.
And the WIDA first-time home buyer was
$1,414.
All right, so we're really close to this $1,400 range. Parents, grandparents out there, you know, if you've got a millennial who's thinking, boy, I wish I could buy a home, but I need to have $20,000. You don't. All right, what's our next one quick before the news?
So number 5 is classic FHA. 3.5% down. Uncle Sam making sure everything's okay. Rate is very attractive, 3.75%.
Oh my goodness!
But you got your mortgage insurance, government mortgage insurance, for the life of the loan, or as long as you keep it. So the APR is 4.795. That payment's only $14.29.
Okay, and that does not go good with condos. FHA has very few condos that they've approved. And good if your credit score isn't so terrific.
Correct.
Same thing with the WIDA, by the way.
Yeah.
Okay, and what's our last one?
It's just regular.
So
you can make all the money in the world.
You can make $500,000 a year.
Correct, and you can still do 3% down if only one of the two people is a first-time home buyer. So if you're married and your spouse previously owned a home but you never have, you get to do 3% down.
All right. Other little nuances with WIDA. The income limit applies to anybody who's living in the home. With Home Ready, it's just whoever is signing the note.
Yeah.
So you could, kind of play that game, which we're really good at. And then FHA, no loan limits.
FHA does have a loan maximum.
Not loan limit, income limits. Yeah. Sorry. So the bottom line, Steve, is you need a trusted guide. We have this cool table now at Accunet.com that summarizes these programs. But really the best thing to do is call us up, let us guide you through the maze. All right, when we come back after the news, I've got a really interesting story about what happens when you're at the financing contingency deadline and you don't have your approval in hand. What are your options? We'll cover that after the news.
Right now, though, we welcome in Colleen Bolin from the WTMJ Breaking News Center.
Thank you, Steve.
Expert advice on buying a home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
So what happens when the financing contingency date arrives and there's still a couple of little speed bumps and hurdles in their conditions remaining on the loan approval?
Attention, because there is going to be a quiz at this end of this segment. I'm going to try my darndest to make it clear, okay? We have a situation where the financing contingency and the appraisal contingency are both today, Sunday. And it should be noted the transaction was put on hold for 2 weeks by the buyer and seller in the middle of the transaction, but the deadlines for financing and appraisal were not extended. So that's why we're in a little bit of a pickle here. And at the moment, while we have an appraisal report that supports the transaction, it's at or above the agreed-upon sales price, the Fannie Mae underwriter is asking the appraiser to provide one more comparable sale. We got that report from the amended report from the appraiser late Friday where she said, there aren't any more stinking comparables. This is all that there are. And we've submitted that to the Fannie Mae underwriter, but we're not going to get an answer until tomorrow at the earliest, okay? The buyer doesn't want to kill the transaction, but doesn't want to be forced into buying either, and the seller, unfortunately, is kind of playing hardball and won't extend either of the deadlines. So what are the buyer's options? Well, can they invoke the appraisal contingency? The answer there is no, because the standard language in the Wisconsin offer purchase only allows them to kill the deal based on the appraisal if the value is lower than the sales price, and we don't have that right now. All right, so that deal killing, get my earnest money back flag is off the table. So now we're talking about the financing contingencies and what the obligations and rights are for each party when certain things happen. So let's just quickly review. The offer to purchase clearly says this offer is contingent upon the buyer being able to obtain a 30-year fixed-rate loan commitment as described below within 35 days of the acceptance of this offer. Clear, right? And we know that date is today. Now, the next section says, under buyer's loan commitment, if the buyer qualifies for the loan described in this offer, the buyer agrees to deliver to the seller a copy of the written loan commitment no later than the deadline. That's clear, but we're not able to do that. This is the dangerous part that comes right after that sentence. Buyer and seller agree that a delivery of a copy of any written loan commitment to the seller, even if subject to conditions, shall satisfy the financing contingency. So we could give the borrower an approval today that says you're approved subject to us getting another acceptable comparable or deeming the appraisal to be acceptable. But if they gave that, they can't back out anymore.
Right.
However, here is the next line that I almost never have seen used. Delivery of a loan commitment shall not satisfy this financing contingency if accompanied by a notice of unacceptability. All right, so this is one of our three options. They could deliver a conditional loan commitment from Accunet that is accompanied by a notice of unacceptability. All right, that's option number one.
I have loan commitment, kind of, but not.
But you're declaring this isn't acceptable. All right. Then another thing they could do is do nothing.
Right.
And we're going to examine the consequences of that in just a hot second. And the third one, which is what they kind of want to do, they're buyer agents, and we're ready to do this, give them a denial letter. Okay, give them a denial letter today based on the fact that the appraisal is unacceptable. All right, here's the interesting thing. Doing nothing triggers another set of rights. It kind of just transfers the power from the buyer, because if they were to deliver an acceptable commitment letter today, they are keeping the seller at the table. It's like, hey, I fulfilled my obligations. We're going ahead with this. They're not in a position to do that. If they do nothing, the standard language says that the seller may terminate the offer if the buyer does not make timely delivery of the loan commitment. All right, so if you do nothing, transfer of power goes to the seller, because then they could kill the deal. I don't think they're going to do that. All right, door number two, if financing is unavailable, which is what we're saying right now, they could give a notice that says, hey, financing is unavailable, and they could either attach a denial letter from us or the unacceptable commitment letter. All right, so the three options again to review. Now you got to pick, Steve and David. Do you do nothing? Do you deliver the loan denial, or do you deliver the conditional loan commitment with a notice of acceptability? Everybody can think about that, as can the two of you, and give us your answers when we come back.
Right here on the Accunet Mortgage and Realty Show. You can also call or text in on the Accunet Mortgage talk and text line. That number is 414-799-1620.
Getting you through the home buying process. Welcome back to the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Longtime Milwaukee community activist Dr. Howard Fuller says we always have to be thinking about the people who have the least in our society. The area icon explains this motto, his longtime advocacy for education, and his passion for the Sherman Park neighborhood during WTMJ Conversations coming up at 11 this morning. So we're in a situation here with Brian Wickert, David Wickert, and you're trying to keep your seller at the table. You're the buyer, and you're at the point where I think you have to meet the financing contingency, but there's a little bit of a hiccup here.
Yep. We're not ready to give it. David?
All right, so I'm going to go first.
Wait. I was just going to recap.
Okay.
So your choices are, you're at the date today when you're supposed to give them the commitment letter, but you can't give them a clean one because we're still waiting for the judgment on whether the appraisal is acceptable. Okay. The value's there, according to the appraiser, but does it meet Fannie Mae requirements? So your choices are do nothing, which then transfers power to the seller because they could then kill the deal. Door number two, deliver a loan denial, a notice of unacceptability, and say, look at Accunet is denying my loan, and we've given them that because as of today, we can't approve the loan. Or we could give them a conditional loan commitment, said, yeah, we can approve your loan as long as this appraisal turns out okay, and then the borrower could deliver that with a notice of unacceptability that this commitment letter is no good. All right. You want to go first?
Yeah.
Okay, what do you want?
All right, so if it's me, I do nothing.
Do nothing.
Because
Why?
if this is a game of chicken,
Yep.
and we're this close to the closing table, I say, because the financing contingency is there so that I can grab a seller by the collar and keep them at the closing table so long as I deliver that loan commitment.
On time.
On time.
Yep.
By midnight of the day that we agreed on.
Which is today.
And so if I can't do that, I release his collar, and yes, he has the power
to punch me in the face.
To punch me in the face and say, I cancel.
All right.
And I just am doubtful that a seller would do that, given that we're already at the 15-yard line, staring at the end zone.
It's the 2-yard line. I mean, we might have the answer by tomorrow.
Okay, well,
all right. What about
it's tough to punch it in.
Okay, Mr. Kettler, do you agree or disagree?
I completely agree with that, and I've bought and sold 6 homes, and a lot of buyers, I've got to get this house. Well, you got to think about the other side of the equation. The seller's got plans probably in place too, timeline-wise. They want to get this deal done.
Right.
I agree. Go ahead, David.
Well, because isn't the real concern on, hey, if we can't line up the mortgage, even after we blow past the contingency, can they cancel, can the buyer cancel?
Based on a loan denial. I think that is exactly right, David. The question that worries a lot of buyers, agents, and brokers is whether the delivery of a notice of financing unavailability and a denial after the financing contingency date is equally as effective at canceling the deal and getting the buyer's earnest money back.
Legally.
Yeah. Is it as effective if you deliver that loan denial after the financing contingency date has passed? I would argue that the loan denial is equally effective whether or not you deliver it before or after. And the specific line in the contract that I would point to is this. It states, if financing is not available on the terms stated in this offer, the buyer shall promptly deliver written notice to the seller of the same, including copies of the lender's rejection letter. It doesn't say a buyer must deliver the written notice of unacceptability prior to the financing contingency date. It doesn't say that. It just says shall promptly deliver.
Can I point out the difference here between real life and contract life?
Yeah.
That if you were the seller of the home and you viewed it as we went past the financing contingency and then you told me you couldn't get the mortgage, and now I'm going to sue you for performance and spend the nenext 3 to 6 months paying lawyers to make you buy my house, god darn it.
Or they would just say, we're not giving your earnest money back.
I understand, but there's a difference between, contract life and real life. A seller is unlike, and I'm not recommending that as a strategy, but if the listing agent, doesn't view it the same way as you just described, I'm just doubtful that they would pursue that.
People can take irrational positions in opposition to the contract language. That's why we have courts and lawyers.
Correct.
But I think the confusion here lies in this idea of what is the deadline. And it's clearly, if you want to, as a buyer, make sure that the deal keeps going and you want to keep control, you got to deliver that commitment letter on time. If you don't, power transfers to the seller because they can kill it. And in my opinion, you could still deliver that denial letter late after the financing contingency because there's no real requirement.
You're describing it's not even late. You just at any time.
Good point. All right. Anything else on that, Steve, or I've got the next topic?
No, I think we definitely laid out all the options there.
Yeah, there you go. Interesting stuff. All right. When we come back, we're going to talk about my nephew and his wife in Maine. I got involved in helping them. We don't lend in Maine, in evaluating refinance offers, and it reminded me of just how bad the required loan estimate form is for shopping for a mortgage. We'll cover that when we come back.
I'm looking at this right here as well on my screen. You're listening to the Accunet Mortgage and Realty Show on WTMJ. If you have a question, you can text or talk it in on the Accunet Mortgage Talk and Text line, 414-799-1620.
Getting you through the home buying process. Welcome back to the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Brian Wickert and David Wickert are with us. We're now taking a look here at a refi situation for the nephew of Brian out in, I think you said, Maine?
The great state of Maine, which is the state. I don't know what their motto is. Dave will look that up. All right. So here's the story. They were visiting here in Milwaukee, and we got to talking about loans, and they went back to Maine and kind of did a little research. They have 23 years left to go on their 30-year fixed-rate loan.
The Pine Tree State.
The Pine Tree State. There you go. Okay. And they have 23 years left to go. Their rate is 4.375, and they're still paying monthly PMI. So I said, hey, let's take a look at a 20-year fixed-rate loan. Now, we don't lend in Maine. So I said, and then Rachel, the wife, had gotten a quote from their current loan servicer, who's Bank of America. And I said, chances are they're going to have awful closing costs. Sure enough, they did. But I said, check with the person you got the loan with from in Portland, Maine there. And so she got a quote from a couple different lenders, and I sent the loan estimate to both you guys. So just looking at that, if you were a normal human being and not the co-host of a weekly mortgage radio show, Steve, looking at page 1 of that loan estimate, which is where most people would stop, what do you think the normal human being would think their closing costs are?
Oh, boy. I can't make heads or tails of this thing. It says here, total estimated funds needed to close.
Well, don't look at that, because what's that label right above it? I think this is what most people would look at. Estimated closing costs are?
$6,268.
I think that's what most people would assume, because it has the words right next to it, estimated closing cost, and then in the biggest typeface on the form at the bottom of the page is $6,268. Well, in order to figure out what you're really paying to get the loan, because that big number includes deposits that you're making into your new property tax escrow account. Mm-hmm. You're just shifting money around. Mm-hmm. It's not a real cost. You're moving it from your old loan to the new loan. So the real number is at the bottom of page 2 of the left side of the loan estimate. So the answer was $2,906, which is still a lot of money.
Yeah.
Okay. Yeah. However, keep in mind, I did the calculation for them. They would save $95,000 of interest by switching from a 23-year loan. Mm-hmm. Is that possibly right? Maybe. Because we're going down to 3.75
and lopping off
3 years of their loans. So they're going to save. I might have misspoke on that.
Tens of thousands of dollars.
They're going to save tens of thousands of dollars. So
in the end,
it would be worth it. But the other thing, if you're looking at page 2, Steve, that you would see if you were going with Accunet, because by the way, if we were able to do this loan for them, and I sent you our comparison as well. I don't know if you saw that.
Yeah, I got that right up here in front of me.
Okay, so can you tell me then, is it obvious to you what their net loan costs are on our proprietary formatted numbers?
Yes, I can see net loan costs here of $1,030 for proposal 1, or proposal 2 would be $0.
Zero. That's right. And in order to make that work on the loan estimate, you have to add together that line D at the bottom of the first column of the second page of the loan estimate, and then you see in section J, yes, that's how many sections there are in the government form, folks, there's a blank line on this main lender's loan estimate for lender credits, because they weren't giving any. Mm-hmm. And you would see our lender credits down there at the bottom of our nice one-page comparison are clearly marked on line 39. And then it kind of nets them out again. So people love this form. Why? Because it's like 50 times better than the government form. Because it's clear. Mm-hmm. And David, do you ever walk people through this online while they're looking at your screen? Tell us how that works.
All the time. We will share our screen and walk through line by line every cost or credit that we're giving to somebody, because we understand that looking at numbers is better than talking about numbers. And maybe to my point earlier, you need that jungle guide to maybe walk through what's going on if you're refinancing or buying a house.
Right. There are a lot of numbers, and so you don't just get to look at the numbers. You get to look at the numbers with a narrator.
Correct.
Who can use his cursor
live right in front of you,
point at the numbers, and then even change them. If you're like, well, what would happen if we put a little bit more money down, or what if we paid $5,000 less for this house? We can illustrate it live, and it's super easy. When we ask people to do that, all they got to do is go to our website, and then we have a link right at the top that says join a meeting.
Yep.
Then all we got to give you is a 9-digit meeting number, and shazam, you're looking at your loan consultant's screen. That's how cool it is. And that's how people love us. We've been using that. David, our 18th birthday is coming up.
I know.
And
we can we can vote.
Yeah, we can vote. We can't drink. That was the drinking age when I was coming of age. Mm-hmm, but, yeah, we're going to be 18 here at the end of the month. All right, so rates are low. We didn't get the chance to cover it, but 3.99 is available again once. Yep. Again, David, at what rate? At what closing cost?
$800 in closing cost.
$800.
4.03.
4.03 APR, that's on a 30-year fixed rate. So the window of opportunity refi is back open. We covered the first-time home buyer programs. It's a great time to buy a house. There are fewer buyers out there. All you got to do to get started is give us a call or click on the blue button when you'll find both of those babies at accunet.com. We'll see you next week, Steve.
Sounds like a plan. Straight ahead here, we'll check in with Colleen Bolin from the WTMJ Breaking News Center on WTMJ 620 AM.
The preceding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors and not WTMJ Radio or Scripps Media Incorporated.